Good morning, good morning, good morning. What is up, folks? This is JT here with another X Trades. Well, not another X Trades. This is our first, actually. Chart Talk live Sunday session. Hope you all are doing fantastic. Hope you all are ready to spend some time together here today. We've got no real agenda. I'm just making myself available to our X Trades members who have questions, have tickers they want to take a look at, etc. Whatever you all want to get into today, that is what I am here for. Again, this is very free form. I want this to be highly interactive. If the chat is limited to those in the members only stream on our Discord, so please make your way there. If you are an X Trades member, make sure you have the chat open, little word bubble icon looking thing in the top right hand corner of your screen. Because this is going out via YouTube, it should be recorded, so if you ever want to go back and recap anything that we cover today, you are more than welcome to do that on the X Trades YouTube page. And remember to like and subscribe to the X Trades YouTube channel. All right, so with that being said, can you guys hear me okay? Can you see my screen all right? Are we good to go? Are we 5x5? Let me know. Good morning, Saint Intraday. What is up? And of course, Navy Plum, what is up? Good to see you here. Trading Dad, very much appreciate you making it into the mix this morning. And Axon Owen, what's up, Axon Owen? Hope you are doing well. Hope you guys are ready to go. Something's tagging me. It says no access when I press on it. It's a member. Sorry. That you can watch on YouTube or go ahead and sign up for a membership, and that should give you access. Sorry, just answering to the stream. All right, sorry, just answering a quick question there over in the main chat. Let me get back to our members only chat. It's night for you. Where are you, Axon? Or I'm gonna go with Owen. Owen over Axon. Singapore. All right. Well, thank you for joining from Singapore. Much appreciated. That is awesome. X Trades International, right? Getting to stuff everywhere. AMD call out Friday morning was amazing. 142 at the stop loss and sold at the close. That's what I love to hear, Navy Plum. AMD has looked fantastic so far. It is running strong. So yeah, that's, I'm very, very happy to be back in the mix. I feel like I'm back up to speed. Full time. Let's go. Let me switch one thing here. I want to change this to, I don't want to edit the channel. I want to show, how do you do that? No, not hide names. I don't want to hide names. That way I can see everybody. All right. Who else has joined us here? T-Rule, Trule, Violent Gandhi. What's up? Good morning, good morning. You guys chime in the chats. Let's get going. We're streaming. Let's not waste any time. We've got until 12:30. That's how much time I've scheduled for this today. So go ahead and start hitting me with your questions. What kind of general questions do you guys have about trading? Anything you feel like you're struggling with, a particular scenario that you feel like you're not handling well? Let's start digging into that stuff. If you guys have tickers you want to start looking at, we can go ahead and take a look at some of those, and maybe that will generate some questions, but we have plenty of time to kind of get into the details that I don't normally have time to spend or get into that level of depth when we're doing the pre-market live streams. Those are very, it's a short window of time, so I got to try to cram as much in as far as making sure everybody's updated on our trade plans and that we have time to work up some new ones. If you have ticker requests, feel free to go ahead and start dropping those, and then we can start seeing what questions come from, okay, JT, why are you doing that? Or what makes you see it that way? Or whatever the case might be. But I really do want this to be interactive. I do want to get to questions that, you guys are really having issues with, right? In your trading executions, or, why didn't this go my way, or it went much further. How would I have known that? In fact, here we go. Trading Dad already in the mix with a very good question. Entries and exits always seem to miss. So give me an example, Trading Dad. Do you have, and if you can be maybe a little bit specific on that, like, is there a particular trade where you're like, man, I really kind of struggled with my entry and my exits on this one trade? And if you give me an idea of what the ticker is, and what your contracts were that you picked up, let's take a look at that. And then we can also maybe kill two birds with one stone. And in the process of answering that question, answer Navy Plum's question here about choosing correct strike prices and dates. So let's dig in. Let's get into it. Like, I'm missing the signal. Okay. What is up, Chris? Good to see you here. Shouldn't you be on vacation, brother? Shouldn't you be sitting on a beach somewhere? Can I unmute you? Do you want to be unmuted? Huh? What? No, I'm already... This is... Huh, that's weird. I had to click start on that. That's bizarre. Thought those started automatically. Whoops, what did that just do? There we go. Hang on. Will it not let me unmute you? I guess maybe you have to unmute yourself, Chris, but feel free to unmute yourself if you want to chime in voice versus just typing into the chats. But hope your vacation is going well, right? I think you're in, what, Puerto Rico? Yeah. Just popping in. Well, I appreciate you popping in. I hope you're enjoying Puerto Rico. I hope you're getting some fantastic food while you were there. So much good food down there in the Caribbean. All right, so let's see if I can find no specific trade on average. It's like I'm missing the signal. Do you have a recent example, though, Trading Dad? That's what I'd like to work off, an example. If not, no big deal. Share new levels for Meta. Plan and made some money. Well, hopefully, if you're following my plans, you are making money, and definitely we can go back and take a look at Meta again. Trading Dad, just, and if you don't have an example, that's fine. Yeah, see if you can grab one. I'd like to work off of specifics, because I think if we work off something specific, right, a trade that you've already been through, that can really help you kind of see, like, oh, okay, I see where that was and why we would have done that way, so on and so forth. If not, I'll just find a trade plan and we can kind of talk about those entries and exits and what to wait for and all that sort of stuff. I'm sure I can find some good examples if I scroll through enough of our plans here. Not to trade for the first 30 minutes was confirmation, specifically SPY this last Friday. Okay, great question, Navy Plum. Let's go ahead and get to that. So here is the SPY plan from, no, that's not it. Oh, I forgot to update that template, didn't I? All right, let me go pull it from the watch or the elite chat, which is where I post that now real quick. I'm gonna go steal those levels. So let's fix this up real quick. We were looking for a break of 613.42, 614.10, 614.55, and 615.39 with a stop loss at 612.86. Downside was 612.32. This one's on me. I forgot to save this into my template. My apologies. 611.71, 611.02, and 610.22. Shared stop loss at the end of the day at 612.86. There we go. All right, so this was the SPY plan from Friday. So this went into effect right here. All right, let's dig into this. Let me also, so I don't forget, again, save that template in here. Let's get to Friday's price action. Let me make this chart a little easier for us to see. Let's get those levels and everything pulled back here. And let me I'm gonna move those labels real quick just so we can keep an eye on all of that. That's could be a little bit easier to see. Let me move that out a little bit more. Right there, that's pretty good. Okay, so the question from Navy Plum was, what do you do about, I don't know why my fills aren't, they should be filling back further. It's interesting that they're kind of stuck right there. I'll have to figure that out later. All right, so the question from Navy Plum, if we're looking at SPY here, and I'm going to just to keep it kind of clean and focused on price action only. So the question from Navy Plum is, generally speaking, right, advice is to, can you check out my PLT or test flow? Yes, that's true. You guys do have access to the Trade Plan Navigator. You also have access to the Ultimate Moving Averages indicator. If you're a paying X-Trades member, I will hook anybody up with that stuff for annual access for free. And if you're still an X-Trades member when your access expires, if it does expire, well, if you're already a lifetime member, I'll set you up for, no expiration access. If you're paying month to month, I'll set you up for a year. As long as you're still paying month to month when that next year comes around, I'll set you up for another year. Ultimate Moving Averages is a great indicator for tracking moving averages. If you don't want to get into something maybe as sophisticated, where is it? Right there, Ultimate Moving Averages. Let me pop that on the screen. And let's kind of whittle this down a little bit. We don't need all these extra ones. In fact, let's just use the, we can use the 921 EMA combo and the 200-333 SMA combo. But I want to make these look more like my usual lines. And then I don't know what MA5 is, but that can go away. There we go. All right, so even if you're just running VWAP, right, and some pretty basic moving averages, and again, these moving averages that you're seeing are part of this Ultimate Moving Averages indicator that, again, I do offer totally free of charge to paying X-Trades members. So the question from Navy Plum was, with regards to the SPY plan, first 30 minutes of the day, how do you weigh that versus confirmation specifically for SPY this past Friday, right? So this is the SPY plan from last Friday. Let me pull this together so we can see those on the charts a little bit better. All right, so hopefully this isn't too much noise. For now, I'm going to hide these Ultimate Moving Averages. Let's just take a look at this using anchored VWAP or auto-anchored VWAP and the SPY plan, right? So our SPY plan said call entry over 613.42. Here we are 5 minutes into the day, 10 minutes into the day. We're starting the third 5-minute candle of the day there. And so we are definitely well within the first 30 minutes of the day there. I would also say to Navy Plum's question, and I'd say that is a good general rule. You'll hear a lot of traders talk about that. You like to sit back for the first 15 or 30 minutes of the day before you go jumping into any trades. Because it can be high risk, there can be lots of liquidity sweeps. There could be shorts just covering and getting ready to short again because they've made good profits. Could be, longs booking profit and it looks like we're going to pull to the downside and then they start buying it back up. So there's all kinds of stuff that can happen in those opening 15 to 30 minutes of the trading day that can pull you into some trades that maybe just aren't totally ready to go, right? So, how do you gauge those things, and how do you gauge when you've got what is a really textbook entry happening on something like the SPY plan or a particular trade that you're looking at? How do you decide, okay, you know what, screw the 15 to 30 minute rule, this is a really great setup, should I go ahead and get in, right? And I'd say that 15 to 30 minute rule should probably more of a 15 to 30 minute guideline as far as, especially if you see something like in that first 5-minute candle start pumping way up and breaking over the call entry. Those are the types of things that get people pulled into bad trades early on into the day and just sets the day off on the wrong foot and makes the trading day a lot more challenging than it needs to be. In this particular case, if we're looking at the 5-minute chart, here's what I like about this. and why I was willing to go ahead and just grab a small SPY position on calls here this past Friday. And what we have here is a couple of things, right? So we've got our opening, we get our close above, right? So now we're starting to look for confirmation. 5-minute candle close above, we're over the call entry. The other thing that we just broke above in this particular situation is auto-anchored VWAP. As a very general guideline, most will tell you, you want to focus on calls and upside as long as the price action's above VWAP, and you want to focus on puts and potential downside as long as the price action's below VWAP. So we're breaking above VWAP, but the other thing that we're doing as we're making that break above, let's really kind of zoom in here, right? We got our break above. Everybody who's followed me for any length of time here at X Trades knows that I am a strong believer. My favorite setups are backtest entries, right? So we get our close above. We're now flipping what was resistance going into the open of the trading day here. We've closed above, so now we're flipping it to support, or trying to, right? So now we're trying to flip this to support. We see this next 5-minute candle come back, dips down right near our support, and right where we have a really great confluence, right? We've got VWAP right there. And I'm going to take a moment to talk about the importance of confluences and why I focus on these so much. So in trading, price action, being able to break above resistances or below supports, or just getting general action in the trading day, as far as the price goes, and getting good movement, getting good volatility, that requires volume, right? There needs to be enough volume. There needs to be enough buyers stepping in to overcome any sellers to get above and then start back testing this, right? So where that becomes important and why confluences are important is because you can kind of think of it as two separate groups of traders, right? So let's say you have a group of traders who likes to focus on just support and resistance levels, which is ultimately what the levels of the SPY plan are each day. And that's a group of traders. Let's say there's 1 million traders who are watching SPY on this past Friday, excuse me, who really like support and resistance, and they have their eye on this same why is that? Oh, because I didn't drop the lines on the charts. So I need those call entries and stuff here. I'm just going to drop these lines real quick. Let's get this close enough. So we're looking for that 613.44, right? Break above. And so they're also watching 613.44, those support and resistance traders. So there's about a million or so people watching that, right? This is very hypothetical, but you'll see where I'm going with this. So let's say you've got another group of traders who's heavily focused on VWAP, right? Maybe they're using Fibonacci's or pivot points or something like that to watch, to develop their, horizontal price points. They're not really paying attention to support and resistance, and that's another group of 1 million traders, right? So when you have a confluence, singular, what we're really looking for there is where we find a moment in time where the price action is testing something that what would normally be two totally separate groups of people all kind of seeing the same thing at the same time, right? So your support and resistance traders are seeing a break above and a back test of a level they like to go long. So that's 1 million people saying, I'm very interested in maybe jumping in to SPY on this little dip and seeing if we ride this higher to some of these higher resistance levels. Then maybe you have your VWAP traders who are saying, hey, look, we just broke above VWAP. We're back testing and bouncing off it. I like that. So I'm going to start playing this up to some pivot points or a fib level or whatever the case might be, right? So now instead of having 1 million people all thinking, or 1 million people kind of focus on buying this dip on this 5-minute candle here, now you've got 2 million people looking at it, right? So that's really where confluence has become incredibly useful. It also goes into what I like to call sort of like multi-factor trading. So when I say multi-factor trading, think about like multi-factor authentication in the world of IT, right? You've got your password, something you know and have created yourself. And then you have your, authenticator code or a prompt that you have to approve on your phone that's automatically generated for you to confirm that, yes, this all looks good. You are who you say you are. I'll let you into the account now. Very similar concept here. We have support and resistance levels that we have developed on our own by studying the chart and studying price action. And then we have things that are automatically generated for us. Those are indicators. And in this particular case, we're just looking at auto-anchored VWAP. So we've got the multi-factor setup. We've got a confluence. Everything is saying, hey, we're breaking above, we're back testing right where we want to back test. We've got that indicator that's also going to help bring more eyes to that trade and more volume to potentially buying up off of that particular price point. So yes, we're within 15 minutes of the day, but we have a really great confluence setup, right? So in this particular case, what I like to do is I like to start off my trades small, right? Maybe buy, 5 to 10 contracts or somewhere in that neighborhood, and then add to it if I see we get continued confirmation, and I'll actually average up and average, kind of create a higher cost per contract average, which is fine, especially when the price continues in your direction, right? And that's one thing that a lot of newer traders don't understand is some of the best traders that I know do a lot of averaging up at the right opportunity points versus having to average down a lot. And we can talk about average down and when you should average down if that's something that you all want to take a look at. So to go back to Navy Plum's question, yes, we are within kind of that, okay, be cautious, but this is a really great setup from a SPY plan standpoint, right? I'm going to delete these extra lines there. Let's pull this over a little bit. I don't know why this is not drawing further back than it should be, but I'll figure that out later. Actually, I just need to move the labels. I don't really need all the... Let me fix that real quick, sorry, because that's going to keep bothering me. Let's go back, Trade Plan Pilot. Why is this not... What world? Where is my X and Y? Oh, ducks, I'm in the style menu. My bad. Let's just go way back. There we go. That puts it right in the middle of the day. That way we can see everything we want to see. So, even though, right, we are well within that, 15 to 30 minute window of extreme caution, don't get, too eager about going a full size, heavy position within that time frame, because again, you can get into a lot of bear bull traps. We have a really great confluence setup, right? And in my opinion, when it comes to those kind of general rules about like, okay, maybe we don't touch ERs within 3 days, or, maybe within the first 15 to 30 minutes, we want to just kind of sit and watch and wait to get into trades. Sometimes you have a setup and the price action and the chart is telling you, hey, listen, I know you've got this rule that you like to stick to, but like this is a really great setup and you should probably take a look at it and probably think about executing, right? So this is also kind of getting into what you're asking about trading data as far as entries and exits. So how do you time that entry? That's how you time that, right? And then your exits are right there for you, right? And it is going to sometimes, and we have a great example of this, right? Sometimes the price action is going to exceed your ultimate price target. That's fine. That is going to happen a lot. But if you sit there and hold every trade that's going in your favor for too long, a lot of things can happen. Theta can start to become a concern with the value of the premiums on your contracts, depending on what kind of expirations you're trading. And, if you're not leaving money on the table, you're almost doing it wrong, because timing those exits perfectly every time and getting the absolute maximum possible gain out of your contracts is very challenging, and everybody will tell you it's almost impossible to time the market. So what are we really looking for, right? We're looking for windows of opportunity, and windows of opportunity that give us really solid risk reward, right? That's what matters the most when it comes to these trades. So let's talk about risk reward in just a second, but I do want to circle back and just show you why this setup was even better, right? We've already talked about this from just a couple of factors, right? Auto-anchored VWAP, breaking above, back testing a key resistance, flipping it to support. It's part of our SPY plan for the day. That's our entry level. So we're getting that all set up and primed for a move up through some of these price targets, right? But if we go back to that whole confluence idea, right? Let me throw these moving averages on here. One of the most popular moving average pairs that day traders especially like to watch is the 921 EMA combo, right? And I'm going to hide VWAP for now just to kind of get it out of the mix. Let's go back here to that same spot, right? So now we're not even looking at VWAP. VWAP is helping, right? All in that same area. But here we have the 921, and we know that this is a fantastic, this one has a lot of eyes on it, right? It's a classic combination as far as moving averages goes. The 921 EMA combo. Can you show your settings for the 920? Yeah, sure. It's very, very simple. Let me go to ultimate moving averages. So you got moving average 1. We're on the 9 exponential moving average. The source is the close of each candle. And then we have the 21 EMA close. If you guys want access to this ultimate MAs indicator, just shoot me a DM with your TradingView username. I'll happily set you up for free, free of charge to X-Trades members. So yeah, and you have all different kinds of moving averages you can play with, right? Simple moving averages, exponential moving averages, weighted moving averages, volume weighted, whole moving averages. There's tons of different moving average types that you can work with. We could get into a whole spiel about moving averages and how they work. If that's something you guys are interested in, let me know and we'll take a look at it. No. These work on all time frames, right? But you do need to be mindful of that, right? So I think I'm going to get pulled into a quick explanation of moving averages. So one of the most commonly misunderstood things when it comes to moving averages is if somebody sees the 921 EMA or somebody's talking about the 921 EMA, they'll say, yeah, the 9-day EMA is moving this direction on the hourly chart, right? That is a total misrepresentation of what these moving averages actually are. So if we're talking about the 9 EMA, what the 9 EMA is it is a average price of the 9 previous candles based on what chart you're looking at. So if we're on the 5-minute, it's the last 9 5-minute candles. Again, you can choose how you want to pull a price point from each of those candles. The default or the most common and traditional price point to pull from each candle is where each candle is closing. But if you want to get into, some of the more complex ways of extrapolating a price point from each candle, you could pull the high of that candle, you could pull the low, you could pull the open of the candle, you could pull the high low divided by 2. You have to have just one single price point, so that's taking the high, adding it to the low, dividing by 2. High low close divided by 3, open high low close divided by 4, high low close divided by 4. So those last few there are kind of creating an average price point versus just picking, one specific price point that gets calculated on every candle that forms on a chart, right? So yes, you can go with various different sources for how you pull that price point, but all that we're doing with an EMA is we're going back and we're pulling a price from the last 9 candles if we're talking about the 9 EMA and creating an average price from those depending on what price point you're pulling from each of those candles. Same thing with the 21, except for you're going back to the last 21 candles. If we're talking about an exponential moving average, there is a calculus in there that basically says, okay, this most recent candle gets a higher value than the candle prior, than the candle prior, than the candle prior. So what it's doing is it's giving a stronger weighting to each candle's price point. If that candle is more recent and the further back you go, it uses less weightings to come up with that moving average, right? If we're talking about a simple moving average, it's just straight up, hey, take the price point from the last 9 candles, or if we're talking about the 200, 333 SMAs down here, right? This blue line's the 200, this red line's the 333. That's just purely saying, hey, go back to the last 200 candles, pick a price point, add them up and average them, plain and simple, right? That's why it's called a simple moving average. So exponential moving average, again, gives a higher weighting score to the more recent candles than it does the older candles, which allows it to be a lot more responsive and trace the price action a lot more closely. So, again, these will work or look, they will show up at different spots, right? But even still, kind of close to the same area in that first opening 15-minute candle. And we've got a 15-minute candle closing above the call entry here. You've got your 921 curling to the upside. They're still in a bullish formation. We'll talk about that in just a sec, right? But they're also right there in a similar spot, but they're going to move, right? So if we go to the hourly chart, they're going to be at a totally different spot here. So that's because we're using different data points as we go through each time frame. So that is something that I think a lot of people misunderstand when it comes to moving averages, is they think like that moving average is static regardless of what time frame I'm looking at. The answer is no. That those moving averages are going to adjust because they are calculating different data points based on what the time frame is. If you're looking at 9 5-minute candles, that's going to be in a different spot than looking at 9 hourly candles, as you can see here, as far as where that 9 EMA is sitting. But let's go back to kind of the point of talking about these confluences, right? So we have another really great confluence here where we've got that 921 combo. Let's throw VWAP in there. So we have kind of a triple confluence here, right? We've got the break above, the back test showing support. That candle's getting bought up off that call entry level. We've got the 921 combo. We've got auto anchor VWAP. Everything in there is saying this should push higher. Now, if it doesn't, we've got a very clear stop loss right in place, and that's going to help keep our wins big and our losses small. So what does that mean? Let's talk about ratios real quick, risk reward ratios. If we're looking at the call plan here, you can see what your risk reward ratios are as you make it to each price point. So between our entry, as if we're getting an entry as close to 613.42 as possible, and an entry with confirmation, again, that's why I like these back test entries, right? Because we're getting the break above, we're getting the back test. That is kind of maximizing the risk reward getting up to that first price target, right? And here is your loss area down here. So we're waiting for a confirmation. If it does break below 612.86, if you take the area of risk, compare it to the area of reward, essentially you're risking $1 for every $1.21 to the upside, just to kind of simplify it. It's not real dollars. You're risking $1 for every $1.21 that you're going to make to the upside. Now that's just getting to PT1. If we look at getting to some of these higher price targets, now we're looking at 2 to 1 and 3.5 to 1 versus our risk, right? And so going back to entries and exits for Trading Dad, again, don't worry about having a perfect exit. Worry about making sure that on your wins, you're taking those, as long as you're getting out at those, 2 to 1, 3 to 1 type scenarios. When you go to take a loss, it's not going to matter as much, right? Because you've made, let's just say $3 on a trade. You go into the next trade, and again, I know I'm using dollars as a very kind of general way of looking at this, but hopefully it's kind of jiving with you all. And if you have any questions about how I'm explaining this, please just ask me to explain further. So let me get a little sip of water here. My throat is starting to say, you're talking too much. So if you're focusing on those, 2 to 1, 3 to 1 risk reward setups, and when you do take a loss, again, you're being very smart. That's your loss is that 1 in the risk reward ratio kind of equation. You just took a $3 win. You can take a $1 loss and still be ahead of where you were 2 trades ago. You could even take another $1 loss and still be ahead of where you were 2 trades ago, or 3 trades ago now at that point, right? So it's not so much about trying to nail like the very top if you're taking calls, for example. It's about sticking to your plan. And the one thing that I would say is most important is trying to sell on approach to your price targets, right? So if we look at this move up to call PT3 here from Friday's SPY plan, right? We've got this fantastic back test entry, all kinds of confluences. These are all free indicators that you could use to find this. As far as the 921 EMA is right there. Oh, let me talk about one more thing though, real quick before I move away from that. I did say I would talk about bullish and bearish moving averages. This is another way to use these moving averages to your advantage, right? So you can see here we've got the 921, little dip down into the 21, nice bounce, gapped up ultimately off of that, still cruising up. Now we've got the price action dipping below here, but those moving averages are still pretty bullish, right? So that's how you can tell that maybe this isn't really quite ready to break down yet. And the reason why I say that is, yeah, you've got the 21 starting to curl down a little bit. The 9 has been curling down, but that 9 has stayed above the 21. It hasn't crossed below it. So overall, the momentum here is still bullish until that 9 crosses below the 21, which would be a bearish cross under and potentially signals a shift toward downside price action. Here we see it does stay bullish the whole way through. We get that push all the way up to the high of the day. And then you can see once these candles start to break down, you get that 9 crossing below that 21. That's the signal that more downside might come. It's not an automatic. And clearly what I would like to see is something more of a, let me grab this, like if we're moving down and we get this crossover, I'd like to see like a ugly color. Let's not do that. Yeah, okay, I'm just gonna fix that color after I draw it. We get that crossover right here, right? We're watching this candle. What I would personally like to see is, why is this magneting to these candles or moving like that? That looks like shit. Hang on. Why you do that? I want something a little bit more freeform than that, thanks. Hang on. I don't use this drawing, but I should be able to, yeah, that works fine. Why does it want to be all wonky up here? It's like it's trying to stick to it. I don't have the magnet tool on, so I don't know why it's doing that. Okay, well, I'll try to make it work nonetheless. So if we're seeing this cross below here of the 921, right, price action's moving down this way. Sorry for the bizarre drawing. I'll figure out why it's doing that later. It's not locked. Yeah, I don't know. That's weird. Right, we're starting to move down to that. I want to see some kind of a test up into this area of sell pressure before I go riding it down further. Now, we never got that. It just continued to the downside. Just know that that's kind of risky, even though everything flips over and it looks like it should be going exactly your way. You know, again, wait for those back tests when you get those flips of things, right? And if you don't get them, sometimes it's better to just not chase. One thing I say all the time, let the trades come to you. But it is a good way to use these moving averages to your advantage, right? Are they bullish? Are they bearish? Like, should I be shorting or looking to go short here? Well, the moving averages are still kind of holding up. 9's over the 21. Nothing's really curling down. Let's see if we maybe test and start rejecting them and they do start to curl down further. That didn't happen, right? Came and broke above, and then we just rode them back up, had to consolidate. And this is, again, chase entry, right? We don't want to go chasing up here. Let it consolidate a little bit, and then you see what happens when now that we're overextended, we're no longer overextended. Now we have another confluence appear, 9 EMA, SPY plan PT2 for calls, and then it pushed higher off that, right? So again, that's how you could really use those moving averages and use confluences to help find better entries for your trade plans, and know where your exits are, right? If you've got a stop loss, you've got to respect it. And if you got price targets, you have to respect. God bless America. I didn't want to do that. Get out of here. Control Z, please. What the F? Go away. Go away. All right. So, hopefully, I don't mean to belabor this too much, but did that kind of help you guys with your questions about entries and exits and when to stop and when, you know, again, we're just looking for windows of opportunities. We're not looking to hold these things forever. If you want to get into something that you hold forever and try to time the ultimate top, you need to be looking at buying equities and shares essentially, and not trying to do that with options. Options have a ticking clock on them, right? And the longer you're holding them, the more risky they are and the more likely they are to eventually blow up in your face. So we have to be, you know, very, very methodical, find those windows of opportunity and execute on them. We did it twice with those Apple calls last week where there was just really good setups, but there was also a very defined window of opportunity. Did we happen to get out at pretty much the top on both days? Yes, very close. but that's just where our target happened to be. It could have continued higher, and if I was all out of the trade at that point, I would have been fine with that, right? It's just about moving on to the next trade, and that's how you compound your gains, right? You take $100 and you turn it and put it into a trade, and you turn it into, you know, $150, and you put that to the next trade, and now you're starting off with 150, and you get, you know, essentially another 50% return on that. Well, now you're at 225, and your gain went from 50 to 75. That's how compounding gains work, and that's why it's important to not get stuck in red trades for too long, because the longer that money is hung up, and, you know, as long as your plan's valid, that's fine. As long as you haven't, you know, broken through a stop loss level or anything like that, you know, it's fine to hold. And if you have plenty of time, it's fine to hold. But you also have to kind of be honest with yourself and realistic and smart about your stop losses, and making sure that you've got the right reward windows versus your risk windows. And a good way to look at sort of how good a trade plan is, as far as like, is this an A+ setup? Is this a B setup, which is like not as ideal? You know, I would say anything that's hitting like 1.5 to 1, just getting to the first price target. So here we're at about 1.21. Just getting to that first price target, I'd say that's like an A setup, or, you know, 1.21 would be kind of like a B setup, where it's like, okay, you know, I like this. The risk reward isn't massively skewed in my favor. The window to the upside is not so big that I'm likely to get at least $1.50 for every dollar that I'm risking in this particular scenario. So, you know, if it's a little bit less than that, I'm going to probably keep my starting position size a little bit smaller until I see things really start to confirm and move in the upside, at which point maybe it then makes sense to average up, right? So anyway, did I answer? I feel like I bounced around 100 topics there all at once, and I tend to do that. Did I get to your question, or did I help, or did you find a specific example of a trade where you were like, man, my entries and my exits just weren't good there? Trading Dad, did that little bit of time that I just spent on that, was that helpful? Let's see what else is in here. I want to catch up on the chat much clearer. Good. If you have other questions, you've got my DM. You know, you can reach out to me anytime. We talk in the private messages. Happy to help. Is there a way to automate levels? I miss them often, not sure how to find them. I personally don't like any sort of automation. Like, there are indicators out there. Let's see if I can if it's maybe still my favorite somewhere or something. Yeah, here you go. Support resistance V2 indicator. You know, so this is a support resistance V2. So it's kind of showing you like potential resistances here and supports. This one looked pretty decent, actually. It can be a little bit of a lagging indicator. It can have issues. Here you see it trying to find supports on the way down as things flip bearish. And it will print a support, but then it breaks down, and then you don't know where the next support is until it prints, right? The closest thing I would say that there is to something that is kind of like automatically generated that would be good for using support and resistance would probably be to use pivot points. For example, these are the Camarilla pivots. Let me... I'm going to hide the trade plan pilot. So these are the Camarilla pivots for the day, and you can certainly use them in conjunction with the SPY plan, right? Like if we did throw this back on there, are there confluences? I'd say the answer is yes. You've got a pretty decent confluence here with the R3 Camarilla pivot and our shared stop loss average down, and then also a confluence there at PT1 for calls. So again, that's another type of confluence. Now you're having Camarilla traders starting to put eyes on those same price points on the chart that we're looking at, because we do support and resistance and whatever other things we like to do. So I would say the closest thing to something that is going to, automatically create the levels is going to be probably pivots. You can also look into fib retracements and fib extensions, but you know, my personal take is learn how to draw support and resistance, right? It is the most important skill that almost every trader overlooks, in my opinion. And being really good and really meticulous and really accurate when it comes to developing support and resistance levels on a chart will set you up so much better than any other trader out there actively trading each day. It's going to blow your mind. That is literally like a 2-hour conversation just by itself, Saint Intraday. How I do it, what I look for, how I go about it. It is really it's a more complex subject than a lot of people think. But once you learn how to do it, and once you get those levels mapped out, then it goes to somebody asked earlier, how do I pick my levels, I think. So we can certainly get into that, like once I've established all the support and resistance levels on the chart, and we'll talk about that in the context of putting together a trade plan today. But yeah, if you want to get into like my full system for doing support and resistance levels on a chart, the best suggestion I can give you, and I'm not here to sell mentoring hours today, it's just it's a fact. Sign up for some mentoring time with me. Again, at least 2 hours, if not a block of 5 hours, and I will absolutely make you as good at drawing support and resistance levels as I am. A lot of folks who have worked with me through kind of like my 5-hour boot camp on technical analysis and setting yourself up for a successful trading system that you can then start to, massage and tweak to become your own thing. A lot of those folks are X-Trade's top earners now, right? They came to me forever ago when they were struggling, and now they are crushing it and getting promoted in the community and stuff like that. And that's really what I want to do, right? Is I want to help build a stronger team here at X-Trades to help, support and grow this community. Would it be wise to use multiple time frames for support and resistance? Absolutely. I go through several time frames when it comes to support and resistance, as high up as the weekly, as small as the hourly. As far as what I tend to teach when it comes to kind of like, okay, here's what I want you to focus on if you're kind of brand new to working with me. Eventually, if I have traders who really want to get into what I would call like micro levels, where we start looking at like the 5 and the 15-minute chart and is really kind of what builds the foundation for the daily SPY plan, is a lot of micro levels. You can absolutely go that low, but to start, I'd say, there's a range of time frames that I like to look at between the weekly and the 1-hour chart. And yes, multiple time frames. There's a whole system for what we look for on each time frame. There's a color coding system for each time frame. So that's why it's a little bit of a, more drawn out explanation than, I have to spend a full 2 hours on it. And really, I really prefer to do that one-to-one, because there also needs to be a lot of question and answer and explanation and follow up. So again, anybody interested in getting into that, just DM me. We'll get you, figure out the best way to get you in for some mentoring. Long story short. All right. So let's go back here. Let me check some of this other stuff. Good to see you here. Good morning, AMD. Yeah, that AMD call out was great. People from Singapore. So choosing expirations, as far as that goes, if you want some very general rules, or if you want a good idea, right, of, let's see, let's go to a trade plan. This will be a good way to look at it. All right, so if we're looking at something like this, right, QQQ, we did this trade plan Tuesday, pre-market. Here we are Wednesday. It's given us there at the open, right, we're a little bit overextended from the call entry. Let me zoom way in on this. So here we see on QQQ, right, we're opening up a little bit overextended from the call entry, right? So going back to the, the question from, I think it was Navy Plum, about, entering trades in the first, 15 to 30 minutes. Should we just totally stay away from it? Again, I just showed you an example from the SPY plan Friday where it's like, yeah, that's a good guideline, but like a really good setup is there with a lot of different confluences. Remember, we had VWAP, we had that EMA combo, key level that we were breaking over and back testing. That's too many checks in the take a shot column than it is, sit back and watch column, right? Here, different scenario, right? We're opening up well above the call entry. So in this particular scenario, and again, I said this before already today, but I'm going to say it again. Let the trades come to you. Don't chase trades, right? So if you're like, oh man, I'm going to miss it. We're going to move all the way up to, 547 and it's going to happen without me because we're already so far above the call entry. Let me go ahead and get in right at the open. No, right? Because you're already eating up a lot of your risk reward space. If you get in here, right, you've all of a sudden knocked off what? We're looking at about a 541 entry and it's opening around 543.32. So that's $2 that you've just chopped off from the risk reward on this trade plan. And if you don't adjust your stop loss, right, if you just trade it from there, let's do this, right? If you were to just trade it from here up to there and you respected the stop loss from the plan, you see what you have from a risk reward standpoint? You're at 0.55, right? And why it is so important to make sure that risk reward is in your favor as you're getting into each trade. And again, I like to gauge it off of PT1, knowing that our risk reward grows as we get to higher price targets, but sometimes PT1 is all you get. If you leave this plan, everything else the same, except for you take an entry up here close to the open, the problem with that, right? And I guess really, entry would be a little bit more like that. The problem with that is now you're upside down, right? You've got this big area of risk, a loss that you're willing to take versus a small area of reward. So if you're trading 2-to-1, right, and you really stick to that methodically and you're getting, your initial set of contracts out at a 2-to-1 risk reward and maybe even some more out at higher risk to reward. In other words, you're going on to PTs 2 and 3. Again, you could be a sub 50% success rate, win rate trader and still be profitable at the end of the year if you're very smart about your risk reward. And that's all that we're focused on, right? We're not worried about nailing the top or nailing the bottom or whatever the case might be. We're focused on risk reward. We're looking for profits, not perfection, right? You hear me say that a lot on these live streams, profits over perfection every day. So be willing to take a loss when it's time to take a loss. Nobody's perfect. I'm not perfect. I take losses. But if you stick to those risk reward ratios and you have the conviction to hold those trades and stick to your plans and let your plans tell you when it's time to get in and get out, whether get out means get out for some profits and move your stops up or, averaging down or cutting the trade. If you stick to your plans and your plans are essentially allotting or allowing for, again, 1.5 to 2 risk reward ratios as you're getting to that first price target, even if you're taking losses every so often, if you focus on those setups with the right risk reward ratios, it's not going to matter that you're sub 50%. You will still make money at the end of the day if you stick to that process, right? So, again, we're talking about the first 30 minutes, but then we get the pullback, right? And so this is where I would say starts to look like a pretty good entry to go long. Yes, does it pull back further? Yeah, but that's fine. So let's talk about what strikes and what contracts we would pick off of taking an entry here, which is where I personally would look to take an entry, even though it's not the perfect bottom, not the perfect bounce. Obviously, if I had waited for the 333 Neptune bullish flag confluence down here, that would have been a really good spot and also a good spot to potentially average down on the trade. But let's just say I'm taking my entry right here, right? Come on, I want to move the draw. I don't like that ellipse thing. I want the circle. So our entry's right here, right? We've got upside price targets pushing up through these levels. And another thing that we could note is that it looks like there is a potential trend right about there. Might be a little bit tighter. Let me get my indicators off the chart real quick. Oops, wrong thing. Okay. So we're looking at an entry here. We're thinking, we know we've got upside price targets overhead. We'll throw those back on in a second. But what I want to find is some kind of a trend that will help us kind of see like, okay, what's the rate? What's the velocity of this trade to the upside? And I think I could adjust this some. You could also look at this on a higher time frame. Probably 5 minutes is pretty tight. Yeah, that looks like a great trend line right here on the 15-minute, right? We get a little bit of a sweep below there, but no candles closing below. Lots of tests, right? Really great bounce off of it there. So you've got this trend working in your favor, right? So now, I'm just going to put trade plan pilot only on, right? We know we've got these price targets overhead. Generally speaking, I want to be in the money by the time I get to price target 1, right? As far as selecting my contract strikes and expirations. How did I choose the bottom of that trend line? Well, I just saw a trend start. I mean, eventually I think you just get an eye for this, but I saw this start to build a trend pretty quickly back here, and I was kind of just able to trace with my eye and see, okay, well, if we continue up in that general direction, that should catch that bounce. And what you're really looking for is 3 good touches of a trend line to confirm it without any candles closing below. So that just kind of gave me the idea of where that ramp kind of started. And then we see it keeps holding that ramp. Maybe we get some liquidity sweeps, some bear traps below, but that ramp held. And then we get another really clean test of it there on Friday that pushed it up really nicely shortly out of the open. So sometimes you can look for those bigger things, but sometimes you can also find it in consolidation. I'm sure I could find an example of like where the trend's really just catching like a few peaks and there are bigger rejections, but here we saw it kind of consolidate. So yeah, that just kind of drew my eye to it. And again, some of that is just experience that you'll build up over time from doing trend lines and looking at charts often enough, right? So hopefully that answers your question. So how would I pick my strike and my expiration, knowing that my first price target is up here at 546.92? I'm getting in here on Wednesday, the 25th of June, off this back test. And if this trend tells me anything, it tells me that we should, right, hit PT1 at the latest, unless we lose our trend, in which case all of a sudden I'm also thinking about holding and sticking with this trade a whole lot differently. Should take us to Friday, at the latest before we hit that PT1, unless, again, we lose that trend, in which case changes kind of the sentiment on the trade as a whole. So if I'm getting in on this Wednesday entry, I know that I should be at PT1 by Friday. Always, always, always buy more time than you think you're going to need. So if I think we're going to be there by Friday, I'm probably going to buy a couple more Fridays out, expiration at the very least. Nobody, has ever been in a winning trade and said, man, I wish these contracts had less time, right? Same thing with a losing trade. Nobody's ever been, upside down on a trade and said, man, I wish I had less time for this trade to work out. I get the appeal of trading shorter expiration contracts. I also get the appeal of trading far out of the money contracts. The problem with both of those is that you have to be not only right, but you have to be so incredibly right, and the price action has to move so incredibly fast in your favor, it doesn't really give that trade room to breathe and still keep you in a position where you're going to get out for profits at some point, right? So always, always, always buy more time than you think you're going to need, and always, always, always make sure that you are buying realistic strike prices, right? So if I'm getting in down here at 541.14 and I know my call PT1 is 546.92, I want to make sure that that first price target is in the money, right? Like my contracts are in the money when we hit that first price target. Granted, we could go even deeper in the money if we go to hit higher price targets. That's great. That's the idea. That's when your profits really start to grow rapidly in the trade. But in this particular case, again, 546.92, 541.14 entry. So, I would say anything from probably a 542 to a 5, I'd say 542 to 545. I'd like that first price target to be decently in the money. Is, any of those strikes, and then you can start looking at open interest and stuff like that to see if there's one particular contract that seems to have a lot of people focused on it, or maybe big money traders focused on it. But really any of those strikes work, right? Anything between, I'd say 542, that gives you a little bit of room, so you're not having to overpay for contracts that are already in the money. And then as far as the amount of time, again, we think that we should be there by Friday based on the trend. That being said, I would give it a couple more weeks out. So you're talking, probably mid to end of July contracts, so if you split the difference, just say 544 calls for, what would that be? Like July, 18th or 25th. I would say 20. I would personally lean toward 25th, just being sort of, again, like to have a little bit more time than I think I'm ever going to need. So I would go with like July 25th, 544 calls on an entry down here at 541.14. And that gives you plenty of time. You do hit PT1 there the next day, so your calls are then in the money at that point, and you have plenty of time left on them to let it work out and see how things play out to the upside. You can certainly let it keep riding this trend line to the upside and use it as kind of like your moving stop loss, right? If you've got a trend established like that and say, okay, as long as my trend's holding, I'm going to, take profits here, and I'm going to hold a few more contracts in the hopes that we'll get to take some more profits there at PT2. Unfortunately, we didn't get to PT2 before that trend started to break down and back test and reject. And here we see another back test and looks like a rejection of that trend there that we spotted very quickly here this morning. So that's how I would go about picking my strikes and expirations, right? Make sure that your strike prices are, there is a realistic and reasonable chance of them going in the money. I like to gauge that off them being in the money by the time we're hitting my first price target for a trade, whether that's upside or downside. And then as far as time goes, find a way to get some trajectory of like, okay, where is sort of the bottom of the trend or this channel, or, is there a moving average that's kind of carrying this to the upside, and sort of project what that should look like and see where it intersects with your price target, right? That's all that we did. We took this trend line, we said, okay, well, it intersects with our price target right here on Friday. So we know we need Friday at the least, but again, that's crazy risky. So, I mean, if I would say the riskiest contracts I would be getting into here would be like this coming Friday's expiration entering last Wednesday. But again, I would buy a lot more time than that, right? I know that the short expiration far out of the money is attractive because they're inexpensive. They're inexpensive for a reason. It's because their chances of actually turning into profits is very slim unless you are an extremely good trader, which some of us can handle those types of trades. But it's just why make the trade more challenging than it needs to be, right? So can we see back in time where the price was at the entry time versus the exit time? Where the price? Can you give me? I don't think I'm understanding the question, Navy Plum. Can you clarify that a little bit? I definitely want to answer it. Also, my dog is begging to go out. Let me let him out real quick. All right, I'm back. Dog is happy. All right, Navy Plum is typing. Let me get to that. We're getting into the last hour of this, so let's shift to working on some specific tickers, and I think that'll give us some teachable moments as we go through that, and will also give us some trade plans to work on and use as we move forward and head into the week coming. But I do want to kind of close this out to make sure I've answered all of the technical analysis type questions. Quick, would it be wise to use multiple? Oh yeah, no, I already answered that. Okay, cool. July 145C would have been in the mid sevens and exit around 11. July 145, or you mean 545? July 18th, 545. Oh, I see what you're saying. See back in time where the price on those options contracts was versus the exit. Yeah. You can do that depending on your broker. That sounds about right. So yeah, you made, over 50% on that trade getting to that exit at 11. So $400 a contract, without having to sweat, holding a hot potato or a ticking time bomb that's going to blow up in your face anytime soon. If you were much further out of the money, I'd imagine that those would appreciate less. Your percent returns might be a little bit better, but your actual dollars returned would be significantly lower. And that's really what it's about at the end of the day is bringing in dollars. Percentages are kind of, how do I say this the right way? They're a secondary factor as far as gauging the success of our trade plans, right? Yeah, absolutely. Yeah, well said, Navy Plum. I appreciate you pointing that out. Ticker request from above. Thank you very much, Saint Intraday. Let's start looking at some of these, and we'll get through them. Shit, I feel like I had one more thing. Oh, that's what it was because the 50% thing came up. So, when it comes to exiting a trade that you've gotten into when it comes with options, right? One thing that I teach when I do mentoring, so I'll share this with you all as a group, trade your options contracts as if you're trading the underlying asset. In other words, trade the chart, not the percent movement on your options contracts. Otherwise, like one of the things that, I know a lot of new traders seem to gravitate toward is like, okay, I'm going to get into this options trade and I'm going to put a 20% stop loss on it. Well, depending on, what contract and expiration or what strike and expiration you're buying, 20% drawdown can happen 15 minutes after you get into the trade, and the trade plan itself on the chart is still perfectly valid. The options price just moved a lot for various reasons, as they do. You get stopped out kind of artificially of a trade that is still valid and probably, there's no guarantees, but probably goes on to hit some targets and make profit, and you're sitting there, with a loss on your record versus booking some more dollars into your account, right? So be very careful about letting the options contract price movement dictate whether or not you are going to stay in the trade. Unless, and this is the one exception, unless you are working on strategies where your goal is to establish free runners. So I'm going to talk about free runners real quick, and then we'll get into some trade plans. So when it comes to free runners, the classic example, although this is, generally hard to achieve, especially if you are picking smart strikes and expirations, just like Navy Plum showed us, we got a great move there on that particular setup. If you're trading 0-day options, you have to be trying to lock in free runners and lock them in rapidly, but also the percent movement is going to be a lot faster than what you would see on safer contracts. So absolutely, though, if we're talking about 0 days, your goal needs to be to get your money out of the trade as quickly as possible and let those free runners do the heavy lifting for your account to continue to build it up. So the classic example is, if I hit 100%, I close half my contracts, right? So if I have 4 contracts, we get 100% profits on those. I close 2 of those contracts and then let the other 2, I figure out where I want to scale those out. Do I think I can get more than 100% on those? Maybe, maybe not. But it takes the pressure off the trade a lot, and the possibility of a truly realized loss off the table, because you've gotten your money back out of the trade and now your profits are just tied up in the 2 contracts that you have left open. My personal approach that I really like is I like to use the rule of 3s when it comes to buying my options contracts. So 3, 6, 9, 12, moving on up the scale, right? If you're only buying 3, I think you can probably see where I'm going with this. If you scale out 2/3, 2 of those 3 contracts at 50%, well, now you're on free runners. You're on free runners a lot sooner than if you're waiting for 100%, to get out half. And you'll see options trades hit 50% a lot more frequently than you'll see them hit 100%. So the goal, especially on those short-term intraday, short expiration, 1 day, 0 day contracts, is definitely to get your money in and out as quickly as possible, and then let the runners do the rest of the work for you, right? The thing that I like about the rule of threes is, again, you can stack that on up, but then when you get to the point where you're buying like up to 12 contracts, right? Well, then you could even consider, maybe selling 3/4 at like 35%, right? So you would sell, 9 of the 12 contracts that you've bought for, 35%. Again, that's pretty easy to hit. Still leaves you with a good number of contracts left, and you've actually gotten your money out plus a little bit of profit. So yes, absolutely. On those short-term trade contracts, the goal should be to get your initial investment into the trade at the right time, get it out at the right time to establish those free runners. That's the one, I would say, exception to letting the percent gain on the options contract price influence whether or not you're exiting. We saw that a couple of times with Apple this past week. I bought lots of time and really, close strikes. So they were expensive contracts. We hit the top of our window of where I was looking to potentially take exits. I was only looking for a day trade, even though I bought more time and closer expirations than I probably needed to. But the exit was the exit. And I think the first one we took like maybe 12 or 14% or something like that on the first Apple call day trade we took. And then we took another one that was closer to 20%. But again, we made good dollars out of those trades. And the charts were telling us that's where to get out. And in both cases, Apple pulled back, and those contracts that we were in would have been in the negative in both cases, right? So we kind of nailed the high of the day, and we based it on the chart, not saying that we needed to get to some, arbitrarily selected percent gain on the contracts that we went with. So yeah, be very careful allowing percent of the letting the movement of the options contracts and those percentages determine when it's time to exit. I'd say let the chart drive that more than anything else, unless you're trading shorter term contracts and unless your goal is to scale out for free runners as soon as possible. We just covered some scenarios where then, okay, leverage the percent movement on the contracts to your advantage. All right, so with that being said, I think we got through a good amount of just kind of like trading theory and best practices. I said theory, not Siri, Apple. So let's get into some trade plans. We've got some requests, and I think as we go through some of these trade plans, that will help answer some of these other questions about how do you choose this level over that level, so on and so forth. So let's dig into it. Let's go. Saint Intraday was kind enough to give me a quick summary, so I don't have to go back through all the chats. If there are any lingering questions, or if I didn't get to your question, please repost it. I don't want to spend a bunch of time scrolling back up to the chat, but I think in that very wide net of a discussion we just had, I think we caught the vast majority of the questions that folks had as far as just like trading psychology and what your approach should be by using the charts, confluences, understanding moving averages, that kind of stuff. So early bird gets the worm. I thank you guys for joining me here bright and early, or right at the beginning. It's not all that early if we're talking about the total day here. All right. So I think SMCI was the first one that we had. So let's dig into this on Chart Talk Live. I hope you guys like the new branding for the live streams. The FOMO thing was something that was what it was when I picked up the torch and decided to run with it on behalf of the X Trades community. I always kind of was like, okay, I can see like FOMO. We want people to have a fear of missing out on the live stream, but we also don't want people practicing FOMO in their trading. So it's kind of like, is that the best name for it? And now that I have my life back after 6 months in contractor office move hell, I am ready to start putting a lot of these ideas and things that I've kind of had on the back burner, getting those done and taken care of, and doing what I can to elevate this community just a little bit further. All right, so let's hide these. We don't need these right now. We want all of our levels. Yep, and I do want to go ahead, get all these kind of back to square one. All right, so this is SMCI. These are my existing support and resistance levels on SMCI, right? So again, I've already gone through the process of analyzing the chart and the price action and saying, here's where I have levels that I like. Now, as you become more adept at support and resistance, you'll start to notice things, right? One of those things is that generally speaking, you don't see these levels make big shifts away from where they, are established, especially, the ones that you find on higher time frames. They tend to be pretty static throughout time. Maybe we could find a good example where we had a great bounce here at 40.77. Let's make this really stick out. Let's see where 40.77 has played interest. Here you go, right? So here we see back in March of this year, we're on the 15-minute chart, should be looking at the hourly to get a little bit more, but we see it break down below, back test that resistance, boom, breaks way the hell down from there. If we're looking at the hourly chart, that'll make it a little bit faster for us to see this stuff. So that's that breakdown that we were just talking about. Here you see another rejection there, another rejection there, rejection there. So lots of rejections. I'm sure there were some support touches too, though, right? Yeah, here you see a break above support, pushes higher. So, again, these levels are established and they'll get used and used and used and used over and over and over again as time goes on. Here we see it as support. That's the thing I was just looking for. We already had it in place. So it really becomes about two things, right? As time goes on, you may see that these levels get shifted a little bit as you're cycling through the different time frames of looking at support and resistance. You can dial them in a little bit tighter. Like if you're looking at the daily chart and then eventually looking at the hourly chart, you could say like, oh, that daily level would look a little bit cleaner if I just made this small adjustment higher or lower. So, take the time to make those tweaks and adjustments, try to get things as laser accurate as possible. But over time, new support and resistance levels might develop. Again, you're probably not going to catch them all on your first run through when you first start building your chart levels. So if you see ones that start to look important and you don't have them on your chart yet, add them. But let's talk about how to pick the right levels. Once the levels are established, how are we going to build this trade plan? And what are we looking for on this SMCI trade? Before we do that, I am going to take a quick momentary break to let my dog back in, go use the restroom, refill my water cup because my voice is starting to get to that very gravelly feeling again. So give me just 5 minutes, folks. I will be right back. In the meantime, I will throw on, let's see. Oh, I closed it. That was dumb. Ah, there we go. I'll throw on my fun little commercial for you guys. the intermission commercial. Hang on, I will be right back. Give me just 1 second. All right, I'm back. Sorry, it's hard to concentrate when you're trying not to. When you have to just pee that badly. Like, can I make it another 40 minutes? I don't think so. So this is good before we get into a trade plan. Good opportunity to take a quick intermission. All right, SMCI, you guys should see the chart again. Let's go. All right. Yep, that looks good. All right, so SMCI, how are we going to set up a trade plan on this? Again, we already have our levels in place. What are the levels we want to watch for? How are we going to find our windows of opportunity? That is really the big question here. Had we had done this last week, well, now that we have done this. So, all right. So here's something that I look for, right? We've got a couple of rejections here, right? Resistance, resistance. Then we see it start to flip, and now we're seeing it bounce as support, right? So now this 4608 is looking like a really interesting level to me. It's probably going to be our stop loss average down level, but we'll see. But we'll go ahead and flag it, right? Again, I'm just looking at this recent rejection, break above, flip to support, nice bounce off that. We're coming back for a back test. Could also be a good buy the dip level off of that. But let's see, right? Because we really need to understand what our upside is. So if we did look to buy the dip off of this, small couple of gap levels up here, right? In the top of this gap, it's really up here at 49.73. So this looks like an interesting spot, although that was pre-market. Did we touch that at all during the market hours? Let's see. Yeah, we did. So now this starts to become a potentially interesting price target if we use that as a buy the dip level, but we're not really sure yet. So I want to also, though, go back and see, okay, well, between these two levels, how has the price action moved in the past? Right? When we get over 4608, do we find a bunch of rejections before we get up to 49.73, or, what's the case here? Here we see a pretty decent rejection, just one, just below that weekly level there at 4802. So again, I'm kind of looking in this range right now just to kind of highlight this. Let's do this. Draw a quick rectangle here. Maybe make that fill a little more opaque. This is kind of the range we're eyeballing right now. Come on, SMCI, show us some stuff in this range. Oh, well, let me get to the hourly chart too. That's going to make it a lot easier and faster to get through this. Okay, now we're talking. So this will help confirm, are we on to the right levels? So what do you see here, right? I see a big fair value gap that does break down, right? We get some wicks above here, but ultimately consolidates below until we get that clean rejection of that level we were just looking at here recently and pushes down lower. So now I know, okay, what I thought already by looking at the more recent chart is really confirmed back here that 4608 below that is probably going to open more room for the downside to continue down. So I should keep that in mind as far as potential put entries, or if I'm looking for an upside trade. I don't want to be holding upside contracts. If we open up another, several dollars of downside, that just doesn't make sense. All of a sudden your risk reward ratios go out the window, and you're in a trade that's, kind of was set up to fail from the outset, right? If you're willing to let it go too far below that. So 4608, I think we're on to something with that being a key level. I think we're also on to, we held it as support, and then we just had this big single candle 1 hour fair value gap that, in my opinion, looking at kind of how this cleaned itself up right here, opens up to that prior support going down to there. So there is a window of opportunity to the upside there above 4608 to get to 49.73. Over 49.73, let's start to look at where we've got support and resistance levels. Where are we making some key flips of support and resistance? We can see a lot of tests right near this 52.81 level, and then we get a little bit of a liquidity sweep above before it rejects once it gets below there. This level could Again, this was put on the daily chart. Here we see it again, break above, holding as support. Lots of support. This, I could certainly make a case for this to possibly be a little bit lower, not by much. Again, this was drawn on the daily chart. This goes back to what I said a second ago about making very tiny adjustments as you get to smaller time frames to catch things maybe a little cleaner. That's okay. You want these to be as accurate as possible. Yeah, no, I think it really does sit a little bit lower here. I'm just going to arrow key it down to get it on there. So let's see how that looks. Do we have any tests of that as resistance here recently? I think the answer is going to be no. Yeah, we haven't gotten quite there yet. So let's go back in the past. I just want to see if by making that adjustment, does that really show us? There's another great, right? Looking at our levels, going back to now 2024, 49.73, strong rejection there. Another strong rejection. 49.73 is a huge level on SMCI. I can tell you that already. Here's our level that I've got on watch, though, back here, getting some tests, support. There's kind of a little bit of resistance. It's an interesting potential level here. But if we move forward, go back to this area right here. Lots of support, lots of support. Then we get this liquidity sweep above. I'm actually wondering if there's a better level for us to base this off of. But it's just kind of really spastic price movement. Let's zoom out a little bit. When in doubt, zoom out. You know what? It could actually, I might have been looking for too much there. I think our second price target might be sitting on a level that I don't have charted yet. So I'm going to add this here at 5105. Let's break that down now. Let's take a look at that here, smaller time frame. See how that plays. Oh wait, I've gone too far back. Let's go this way. There we go. Yeah, so you can see we kind of consolidate as support. We get some liquidity sweeps below, but ultimately it's, you know, a lot of these candles are just opening, closing, etc. right on that level, and then we break below, and then we start to see some clean back tests that push it lower. I think that is a reasonable second price target because of that, which then gives us our third price target up here. Again, I'm still a little wishy-washy on where this level actually sits. Don't like to be wishy-washy, but it's just there's kind of a lot of wicks to grab and bodies to grab based on it being potentially a little higher. But I mean, I'm also sitting here nitpicking 19 cents, right? Which is probably getting a little too granular, but I you know, pride myself on accuracy. So I want things to be as laser accurate as possible. This liquidity grab does come up kind of near some interesting levels too, though. It's just not quite there. So this third target, yeah, I think it needs to sit somewhere pretty close to this, where that rejected. But with all this support down here and that just kind of being more of a liquidity grab above, not a real true rejection up here, I think this is just a liquidity sweep over this level. And I don't really see a strong case for basing it any lower. So I'm going to say kind of threading the needle here between a couple of potential rejection points. And sometimes that's what we do. But I say 52.66. So now we're looking at all these upside targets. Again, we know 49.73, very strong level here on SMCI. So let's get to this current price action. Let's see how it built its way up. into here on this most recent move. So how can we structure this for a good upside trade plan? I think we also might have a level. I don't have it mapped yet, or this weekly level's just a little bit off. Again, when you're on the weekly chart, you're very zoomed out. It's hard to see everything. I do want to take a quick look at how this sets up this weekly level. Going back in time here a little bit again. I can get rid of this. We don't need this zone anymore. Yep, nice rejection there. Support a little shy. There we see it kind of build up and try to ramp off of that. It's a little bit lower, but that's okay. It's a weekly level. Let's go back just a little bit further. So here we see, right, a break above takes us up to that 49.73 key level. See lots of consolidation, resistance, flipping to consolidation of support, pushing higher. Nice rejections near, maybe a little bit of a bull trap there before it dropped real hard. Definitely a rejection with a liquidity sweep there. So yeah, I think we've got something pretty solid there. Very close to a nice support test there at 47.77. So I do like that level. We are up against it here or after hours there Friday. Tried to recover it, but we're still below. So we may be setting this as a little bit of an aggressive entry, but I guess first things first, did you all follow along with kind of how I went through and found those levels and where I found those windows of opportunity, right? Because to me, it looks like if we break over 47.77, we have a very clear shot at getting up to 49.73. The other thing I like about having this entry here at 49.77 is we've clearly got a base that's trying to form here at 46.08 where we had a hard rejection there. We had a nice rally base push off of that same 46.08. So to me, 46.8 below that becomes very problematic for upside if we take that entry above 47.77. And then you all saw how we methodically picked our price targets, right? So now if we start to set this trade plan up, let's do it with just the long short tool for now. Right, the windows of opportunity start to look like this. And this is where it becomes important from a risk reward standpoint. We are at about 1.12 to 1, so not a massive leverage as far as the risk reward goes there, but that's fine. And if we look at this trade plan as a whole, getting up to potentially PT2, now we're looking at closer to 2 to 1. If we get all of our price targets, 2.84 to 1 risk reward ratio. Again, we've got a very sound, because let me show you this, right? If we do this, leave our price target there at PT1, we've got our stop loss down there. It's actually a little bit higher, like right there. So it's more like a 1.2 to 1 risk reward. What happens if we lose 46.08 and we don't cut the trade? Well, I think if we lose that, we've got clear rejections and consolidation below this 44.08 level that was already mapped out on our chart. So it's an established support resistance level. Can make a minor tweak to it there, 44.13, right? We've seen it now flip and bounce to support. We just ran right up through it, didn't really back test it there, but that's fine because we can just look at this and say, you know, clearly resistance, 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 nice flip to support. And if we get below that, it moves even lower. So to me, if we look at just this move right here, kind of is telling of what's going to happen below 46.08. Well, okay, if we don't respect our stops and we give the trade more room to work out, we'll give it down to 44.03, right? Well, now all of a sudden your risk reward is upside down. Sitting at 0.55 to 1, so you're looking to make 55 cents for every $1 you're going to risk on this, just to kind of use generalities. And even if you stretch this all the way to PT3, you're barely back over 1.35 to 1, and that's, you know, that or barely over 1.1 to 1 at 1.35. And that's assuming that you get all of your upside price targets, right? And we've got a rejection right here where we could possibly double top, not even get to PT2. So again, still upside down, right? So that's where, again, you have to be very methodical about where are your areas of support. So if I see, right, we've already tested this once as support. Now we're over that 47.77. If we get back over 47.77 again, I would very much expect 46.08 to hold as the next support down if for some reason it slips before we start hitting price targets. And if it slips down to 46.08 and doesn't hold, that's when it's time to get out. But that 46.08 level is the one and the only time that I will average a trade. And the reason for that being, if you're adding right at your stop loss level, or what I like to call the stop loss average down level, averaging down is something that I see a lot of traders do horribly. And I don't want to be mean in saying that. It's just true, right? They're just like, well, I don't know what to do with this trade. I've already averaged down on it 3 times. It's like, what are you doing? You're literally just shoveling money onto a cash fire if you continue to average down and average down and average down, right? If you do it methodically, it's okay. When I say methodically, if we have this stop loss average down level right here, right, I will average down if I see signs of a bounce or if we have a confluence there. In fact, let's throw our indicators back on the chart. So if we're looking at this right now, we could see it be a little bit of a wick below, and if it got bought back up and looked like it was going to hold the buy pressure here on NTS on that little liquidity grab that taps off of 46.03 there, I would certainly say, okay, I'll take a shot at averaging down there. If I do, right, I'm adding to the trade, but I'm also adding right at my stop loss level. So if for some reason that looks good, but yet still doesn't hold, and I throw a little bit more money into the trade to try to correct the fact that the plan didn't really cooperate from the outset, well, then that money that I added is not really being given a lot of additional exposure to the drawdown on my account if that trade does ultimately go for a loss, right? I'm adding right down here, or maybe even on signs of a bounce right there. If we do still continue down, those additional contracts that I added really aren't compounding my losses all that much. But if you continue to average down and just keep giving trades, wide areas of space to potentially have to breach before your stop loss is triggered, that's where you really start to compound your losses, and you wind up again just shoveling cash onto the money fire, and ultimately wind up with a blown account eventually. And that's that's the opposite of what I want to see coming out of anybody. So with that said, I like this upside trade plan for SMCI, but since we're here, right, I also don't like to come into these trade plans with a high amount of bias. And so anytime I'm going to spend some time on a chart to develop a trade plan, I certainly have my leanings. Like on SMCI right now, I would be leaning bullish. But if I am not, or if I'm going to take the time to do this, let's say, my bias is incorrect, there's going to be a downside opportunity that plays out, right? We're already looking at the chart. We're halfway there for the most part. And sometimes we use same levels, like the stop loss average down on this one. I could certainly see the stop loss average down being a good put entry, right? Playing down to 44.13, where we have a confluence down here with the 200 SMA. We've also seen, again, how that move can play out back here. So if we look at that as a first price target, well now, and this is going to look a little bit different than my typical chart, but essentially what we've got is we've got an entry above with targets up here and a stop loss right here. And then we've got our put entry as if we invalidate the stop loss and continue down. Well, now we start opening price targets down here. And I certainly wouldn't want to be in a short position if we break back above this weekly resistance, because we can see what happens next, and that's going to skew the risk reward against us. So we're going to essentially have a shared put stop loss call entry and a shared call stop loss put entry, right? And we've got a confluence down here, so that really helps me like that. That could be also a potential good point to go ahead and close shorts and maybe try to go long again with that confluence coming up. These SMAs are still bullish. They're both trending to the upside. The 200's above the 333 and sitting right there at that 44.13 level. So that looks like a good first price target to the downside. I can tell you just by looking at it, risk reward is going to be decent, probably a little bit better, if not maybe exactly the same as the upside. We do still have a small little gap, and I think this level does need to move up to right there. Small little gap to fill. Let me hide my indicators again real quick. To fill down here, right? It's not, not much of a gap, but there is a gap there from 42.96 down to 42.79. So it's like literally like a what, 17-cent gap, but it's a gap nonetheless, right? And those gaps tend to act as pretty good support and resistance. And generally speaking, again, this is, by no means a guarantee, but generally speaking, you see price action reverse once the gaps get filled. So we do have this little tiny gap that fills down to this level. We've seen rejections here. We've seen support on it. So I think this is another smart level that if we are going to play downside with that potential gap fill bounce, that should be our second price target. And because it would be a gap fill, I would probably use that to influence how heavily I scale out at PT2. And then PT3, again, a top of a gap. This gap is since filled. Could this level be a little higher is my question. I think it could be, actually. I think it does sit right about here. And again, sometimes these levels that are established might, clean themselves up or shift a little bit over time. So don't be afraid to make those small tweaks even after you've established your support and resistance levels. Make sure that you're always being open-minded as far as if they need adjustments, but at the same time, don't feel like you've got to adjust them constantly and all the time. So I like that as a third price target. Could we get down to 40.77? Is my question. I think we could, actually, to tell you the truth. This is a strong double bottom. I wouldn't be surprised to see us come down and test it one more time if there was a strong enough downside move. So let's take a shot at it. Really, it could be either of these two levels, 41.92 or 40.77. But at this point, we're at the second price target. We should have scaled out for plenty of profits. And by that point, our stops should be in profit as well. As far as if it retraces enough, we're going to stop out for profits at that point once you get to PT2. So I say take a shot, right? Let those winners run, water your flowers, pull your weeds kind of thing. So if we look at this from a, go ahead and throw trade plan pilot on this. We'll set this up. We'll even put some alerts on it for the chat. So we're looking for a break over 47.77 for a shot at 49.73, 51.05, and 52.66. Our stop loss average down on the call side is going to wind up being our put entry. Don't see that often, but here we see it, and it does happen. Then we're going for 44.13, 42.79, and 40.77 with a put stop loss average down at the call entry at 47.77. This is not shared. Let's see how this plays out with how these labels show up with sharing two labels on two different lines. Let's see. Oh, I've got the indicators hidden. Yeah, not too bad. We need to just tighten that y-axis up a little bit. There you go. Now it probably makes a lot more sense. Oops. There we go. All right, so this is what a SMCI trade plan looks like. So let's copy this, post it in the chats here, SMCI live stream plan, so you guys can grab a copy of it. Or if you have access to Trade Plan Navigator already, plug those levels in, set your alerts up per the instructional video, and you don't have to wait for the JT bot or anything like that to tell you what to do. It'll all be right there on your chart. TradingView can send you alert notifications that a level's being tested on your Apple Watch or your cell phone, whatever makes it easy for you to be able to monitor these trade plans and be ready to take action on them if you have that Trade Plan Navigator indicator set up. So I'm also going to post this in the Elite chat. And let's grab this message link. Now, you guys wouldn't have this in your version of Trade Plan Navigator, which is why this one's called Pilot, because it has this extra field in here where I can use this Discord link to then generate good information through the bot that will post in the main options chat as these levels get challenged. So we'll go ahead and lock that in. Let's save this template so we can refer back to it if we need to. We'll call this a member selected trade plan 1 since you guys called the shots on it. We'll save and lock that in. And then we'll create our alerts. I personally set it on regular trading hours. That way we aren't getting pinged through all hours of the night when there's not a whole lot we can do about it at that point. And so we'll go ahead and set our alert regular trading hours on the Trade Plan Pilot condition. Any alert function call, so any of these levels get tested, we'll get notified. That's one alert, essentially captures everything on the chart just by using one alert spot. And then we only want to get alerted every 30 minutes at the most. Expiration will give this until next Sunday, so that would be the 6th. Sure, we're doing 12:30. We'll come back and circle back to this at some point. It won't cause any additional alerts or anything anyway. So giving ourselves a full week on that, we'll go ahead and create that. So alerts will go into the chats and we will have plenty to watch there on SMCI. So was that helpful as far as kind of how I talked you through that? I know that was one of the big questions. How do you choose the levels? What are you looking for? Again, I want to make sure that you all are picking up things and starting to see things the way that I see them. So if you do see somebody post a chart or post an alert or something like that, you'll have the wherewithal to take a look at the chart or take a look at the setup, or maybe they've even listed their price targets and stop losses and say, that doesn't really add up. Maybe that's an alert I'm not going to follow because the risk reward's wrong, or, you know, there's something I don't like about it now that I know what to look for a little bit better. You know, that's the goal of the time we're spending together on these Sunday sessions. So take a look at AMD Friday. It's a perfect example. Hopefully I locked that into one of our live stream plans. Let's see. Crown, did I do AMD back here? Where was my AMD plan? Oy, oy, oy. I don't see none of those. Okay, well, let's go back to where we were. For now, let me go find that AMD plan. I'm sure I posted it somewhere. Give me just a moment. Or do you have it right there, Navy Plum? That would be helpful. Or link me back to the Discord message. I'm sure I just forgot to save the template. I do remember it playing out beautifully, though. Yeah, main chat. That's what I thought. Let me go find that real quick. And I might run a little bit past 12:30. I'm just realizing what the time is. So I've got some time still. So let's take advantage. From JT mentions AMD. Oh crap! Nope. Took me in the wrong place. Hang on. Sorry. I'll get this. All right. So here's the message. Oh, you know what? This is from the, I think one of the top tickers or something like that. So I was looking for a break over 145.55 to play for targets to the upside. We had 142.90 as a stop loss average down there. You can see we pulled back to that, then rallied off of that once. Then we made some adjustments as we went into Friday, where I said could be a good dip buy here on AMD. So the dip buy, right? I was talking about this move down to 142.90. I said, if you buy this dip, I like it, but you got to keep a tight stop on it at 141.90. And sure enough, came down to that 141.90, launched off of it back up into this bearish momentum, pushing things down a little bit there. No big deal. But you can see what would happen right below 141.90 on AMD, right? We've got this big rejection here. We broke above. We started back testing a support, clean back test there. Again, I still liked this level for a buy the dip. That's what we were talking about, buying the dip at 142.90 with a stop loss right there at 141.90. So giving it literally $1 of room to potentially play back up to, you know, the call entry level. So a huge risk reward set up on that. But you can see, right, what's going to happen below 141.90 just based on this recent move. Well, then we slip down most likely to 139.63, and if that don't hold, there's some good consolidation there, kind of a decent flip of support, so 138.69, and it could just keep going down and going down until we start to get to these buy the dip levels, which for me is sitting somewhere around 133.30, 132.90, somewhere in that neck of the woods. So, yeah, AMD... that kind of just modified some of the key levels, and that guidance that I gave Friday was absolutely spot on, which is what I focus on, right? And I'm able to do that with that level of accuracy because I spent a lot of time building my support and resistance levels on these charts. And while that might seem cumbersome for some folks, I think that it is time well invested, because if you really build up your chart levels, and you can see all the levels that I have on this chart, right? I might spend, now granted I'm a lot faster at this than probably somebody who's just getting into developing support and resistance and understanding how to draw it correctly. You know, I probably get through a whole chart in, let's just say, 45 minutes to an hour. Probably might take newer traders 90 minutes or a couple of hours to build up all those support and resistance levels. But the point of that is that you can extrapolate from those levels dozens, if not hundreds, of potential trade plans that make all of that time invested well worth the time you spent on it. So let's get back over here to the channel. All right, so let's see if we can't knock out one more ticker and Hansel and Gretel answer any lingering questions that have come out of this. But again, I wanted to spend some time talking through that SMCI trade plan so you guys could really see, okay, well, if the support and resistance levels are there on the chart already, how do I pick the right ones? What am I looking for? Where are those windows of opportunity? That's what we're really looking for. Windows of opportunity that we can capitalize on, where we have a reasonable stop loss in place and a strategy for how we're going to play those levels and play that chart, you know, as we make our way through. So, let's see, we had VKTC, APLD, Meta, PLTR, Tesla, and Qubits. Let's see if any of those, I'm curious, I know we had some top tickers released probably today. Where is it? Oh, it's up here. Let's see if any of those jive with any of the top tickers. PLTR is one of them. And I think that was in the lists of the ones that were requested here today, right? PLTR. Okay, well, let's use that confluence, right, of the top tickers and something that you all requested. Let's take a look at PLTR, and then we will wrap things up for the first, but certainly not the last, Sunday session. Would definitely welcome anyone's feedback from today, things you'd like to see done differently. You know, whatever the case might be, ideas for improvement, suggestions, whatever. Should we start a little bit earlier, start a little bit later? I'm open to all that. But let's keep going. Let's keep working on this stuff so we can get the most out of the time we've got left. So let's get through a whole PLTR trade plan. Let's get our levels on the chart. Boom, there we go. Let's clean those up real quick. All right. So now we're going to start to factor in indicators and stuff like that. We'll kind of take this to the next level from where we just were with PLTR, or I'm sorry, with SMCI. So as we look at PLTR, first thing I notice is that this one seems to be breaking pretty bearish at the moment. We did break through the buy pressure there on NTS. We have flipped the momentum, this ribbon that's coming down, bearish. We are struggling with the 333 SMA as resistance. That's one of my favorite moving averages. Overall, those moving averages are still bullish, but that's about the only thing that's bullish on this chart right now. Let's just take another look at this also on the 4-hour. That's interesting. That closes like literally pennies from flipping this to the bearish side. So I'll be interested to see how this one plays out, to see if it requires or makes me think about making any time. And it would be a very, very, very small adjustment just to try to filter out a little bit more volatility on NTS. But this is, at least as far as the current version, that I am quite happy with, flipping things bearish. So, you know, we may need to push back up and run into some of this selling pressure there too. But yeah, 1 hour's convincingly bearish, 4 hours looking pretty bearish. But again, I'll take a kind of a deeper look at that after we wrap up, when I've got some alone time with my Pine script. So let's put together a trade plan for this. Let me get a big stretch in there. Let's also take a look at the 15-minute. See if we have anything key that we could flip on this. Moving averages are overhead there. So to me, I think 139.92 was an all-time high at one point on PLTR. Let me hide this object window. Hide these indicators real quick too. Could be a little bit higher. All-time high is just kind of marked to market, so we know where it was at that time. Let me hide this VWAP too. I want to see where that candle wick is. And that's probably, yeah. So kind of new price discovery. PLTR hasn't spent a lot of time up in this range. That's okay. But what I'm kind of gravitating toward is shifting this up just a little bit right there. I think that looks pretty clean. And if we make that shift there, where we now have that rejection, but now we're much lower. So the question is, here's a bounce. Is that anything, or is that just a one-off? I'm seeing lots of bounces. There's some resistance. Anything else that helps us real quick? I think the answer is... Come on, get us through all the tariff nonsense. That's the time where that was going on. So even back when market was at all-time highs, PLTR just nowhere near that at that point. All right, that's fine. Just wanted to check. This is interesting. This level right here. And it does get bought up quite frequently, especially off this range. These were some fib extensions from back in the day because they're purple. So those were kind of just projections of support and resistance. I think we do have a really interesting level right about here. How's that look? Could be a little bit lower, maybe. Yeah, actually right about there. That looks good. So for PLTR, Palantir, the question is, where would our stop loss be? I'm looking at this window right here, but the question is, does that leave us with a good backstop to where we've got a good risk reward for this trade plan? We can't just pick one to make it a good risk reward. We need to make sure that we're establishing it off of what the chart is showing us. Yeah, I mean, I'm seeing a lot of rejections around this 134.66 level. Could even be slightly lower. Some support off of it as well, but then you get below and it drops hard. You wonder, that rejection right there, could that hold? And again, shift this a little bit. We're only talking about 20 cents. Just take a quick look at this real quick. Does that really change my mind all that much, looking at that slightly modified stop? Come on, give me some candles to work with here. Nothing. Okay. There's that part of that gap right there, but it doesn't quite make it down to that rejection. Yeah, I think we could set this stop a little higher and have a tighter risk reward. I think there's also a case to be made to maybe give it a little bit more room down to here. Risk reward would still be okay. Just want to see how that stacks up. I really wish that candle would have come down and maybe wicked off of it. That would have given us a little bit of a better sign, but you can see it's already slicing through that kind of higher level. We did have a nice bit of consolidation right up against this level as resistance. So I'm going to say we're going to use 134.29 as the stop loss for this potential upside plan. First target being up there at 138.66. Second target, definitely need to be looking somewhere near this top. We've got what was a prior all-time high there around 140.32. Do see some support happening though near where we just had that kind of a double top rejection, a little bit higher. We're not going to get anything going back any further there. Because this level is already established, these look like a couple of liquidity sweeps overhead. We do see some clean rejections there. A nice bounce of support that led it higher there. I'm going to go ahead and call 140.32 second price target. But here's where things get interesting. Now we have a pretty decent fair value gap where it just shot down through a bunch of supports all at once. There's definitely a level here that I haven't charted yet, but we'll add it now. Could be newly established with PLTR just recently playing up in some of these ranges. But the real, there's also a level right here. And to me, this looks like the one that we just kind of sliced through and created that fair value gap. It was support the day prior. We just dropped straight through it all the way down after building up this move. And you can also see where we've got this, what looks like a bounce, runs right up into resistance, then flips to support. We're holding a support. We get this pump and then just huge fair value gap, right? So over PT2, while there is a potential stop there at 141.58 or potential resistance there, if this thing really wants to close this fair value gap, I think it could take us all the way up to 144.12. So let's use that. We're going to leave this level on the chart, but we're going to use this as our third price target. Again, remember, you're constantly moving your price targets with the trade up as we move up through these levels. We've got a good stop loss in place there at 134.29. So I like that upside trade plan for PLTR. So where does downside become interesting? Clearly, we've got resistance. Now we're trying to hold it as support. Then we cleanly hold a support. Big bounce off that. I think without a doubt, below 132.25, this really starts to look bearish. And looks like on that bearish move, again, we've got some wicks and stuff showing up down here, but here's your really nice support bounce. Seeing it struggle to close or hold any candles above that level. Do we have any more that we can use back here? There's a big rejection off that level. Could really be one or the other, honestly. And when in doubt, I'll shoot one level more conservative. If I'm really torn between 130.49 and 130.09, I say let's go ahead and start taking some profits there at 130.09. Stop loss now becomes a question. We see big rallies, or saw a big rally off of this 133.41 before. There it is again, right? We flipped that, broke above, flipped it to support as it tried to make this bounce off of what is now our PT1. So already, I think we just got our confirmation that that is going to be a good stop loss. If we get over it, we're not going to want to be looking at too much downside anymore. So stop loss entry, PT1, sorted, PT2. This fib extension, again, it was a projection at the time. I think we can lock it in right about there. Now that it's locked in as a level, I've got my little color coding system going here. 128.70 looks like a good PT2. Third price target. Yeah, I think it's sitting right about here at 125.64. It might come just shy of this, but that looks like a really good level for a third price target. So this is what our PLTR trade plans are going to look like. Let's set this up in the pilot. Call entry at 136.10, PT1 at 138.66, PT2 at 140.32. Remember, we do have a potential rejection spot there at 141.58. We're going to take a shot at 144.12 for a third price target for the plan. Stop loss average at 134.29 to the downside. We're looking for break below 132.25, 130.49, 128.70. Whoops, 70. Third target 125.64 with the stop loss average down at 133.41. Yeah, use call put, stop loss average now. We're not using shared, so that looks good. That looks good. Let me flag this one guy. Move you right here. Take the rest of these. Put them in that box. Hide them so we can still see that level on the chart. And if we throw NTS back on this, again, we already know that this has major issues, looking quite bearish, so I would be leaning toward this playing out to the downside, but it's Palantir, it's a very strong name, so, you know, could do some crazy things here if there's some, you know, government contract development or anything like that. I think that's part of the reasons they got hit. I think didn't NVIDIA or ChatGPT, OpenAI, I think got a contract that everybody thought Palantir was going to get. I think that's what shook them up on Friday. So let's make a slight adjustment to this Y offset. Let's spread these out just a little bit. There we go. Okay, that looks good. Let's bring this in a little closer as well. Whoops, didn't need to do all that. There we go. Looks good. That way we can get more candlesticks on the chart here. We can kind of see some of the stuff that we saw as we picked these levels. All right, so here we go. This is our PLTR live stream plan. Copy image. And I'm going to go ahead and post this over in the top tickers for today. Get that posted. Let's grab our message link. Get that added to the trade plan pilot here. Let's lock this indicator in. And set our alerts. Last but not least, thank you for your patience. Minutes, 30. Let it go till next Sunday. Not that it really matters. It should just be Friday at 1600, but whatever. Cool. Create. All right, so let's talk through this one last time. What are we looking for here on Palantir? We are looking for a break over 136.10. If it can get over that, we should see price targets at 138.66, 140.32. Potential challenge of resistance there at 141.58, but ultimately we think the third price target could take us all the way up to 144.12 with a stop loss average down at 134.29. To the downside, we're looking for a break below 132.25. That should bring targets at 130.49, 128.70, and 125.64 with a stop loss average down at 133.41. Risk reward very tight. Again, first price target, risk reward 1.4 on the call side, 1.5 on the put side. That's pretty good, right? As far as our risk reward, just getting us to PT1. And again, sometimes PT1 is all we get. So we are past 12:30. We've done our 2 hours. What lingering questions or questions do you all have now that I didn't address? I'll take another, 5 or 10 minutes to try to get through those. Anything that we didn't touch on that's kind of just a general trading question or perhaps a position that you're currently in. I'll try to give a couple of quick answers and then we will wrap it up for the day. And I think what my plan is going to be, what I'm going to try to do is kind of have these Sunday sessions take place on the last Sunday of every month. Obviously, if I've got plans or something like that, the last Sunday of the month, I may shift to like the second to last Sunday or whatever, but I'm going to try to do at least one a month of these Sunday live streams where we have a little bit more time to talk. It's very free form. I don't have to rush through everything to get a bunch of plans generated and review a bunch of plans and get the SPY plan put together all, in like a 45-minute window of time. So I think that these will be very beneficial for folks who want to start to learn and really dig into these the technical aspects of trading and how you can leverage those to find long-term success, build a system around them, and just become methodical and steadfast in sticking to your plans and the levels of your plans. Once one goes into effect. All right, so what questions do y'all have? Last chance. If the chat stays empty for another couple minutes, I think we're going to call it a day. So hit me. Let's go. Trading Dad, what do you got? Damn. You have a great weekend as well, buddy. I thought you had a question. I put too much pressure on you. Anyone else? And remember, if you don't already have it open, the chat window is a little word bubble, top right-hand corner of the screen. Ooh, an ESXi host. Fun. Have you seen the Trading Sasquatch? A Day in the Life of an IT with the AI Sasquatch guys? Have you seen those? Oh, brother. Hang on one second. I got to post this. I know we're getting a little bit off topic here, but let me go. These are hilarious. You will appreciate the shit out of this. Let's see. Oh, wait, no, it's the wrong thread. Where is it? Where is it? Hang on. It's right here. It's right here, I promise. Yeah, here we go. You'll appreciate this. Let's go to the morning live stream. No, members only live stream. These are great. All these Sasquatch vlogs are great, but he's got a couple of IT ones out. Whoever's behind the scenes of these AI videos, yeah, watch that one. The one with the you'll see it. The one with the printer is, I've seen that one before. many moons ago when I did a lot more desk side support than I do these days. All right, Navy Plum typing something, and then I think we're going to wrap it up. Let's see what Navy Plum has for it. I think next time position size is important to discuss. Absolutely. Yeah, we can get into that next time. Make sure to keep that one in your back pocket. Bring it up on the next Sunday stream. Jot it down somewhere until we get back to one of these again. It'll probably be end of next month sometime. We'll do another Sunday session just like this. All right, so I think we covered a lot. I hope you all found this extremely beneficial. Again, we are limiting this to paying X-Trades members because I want to make sure you all who support this community are getting the most value when I'm going to spend my time in here on a weekend like this. I want to make sure that you all have an advantage over anyone else who might be watching or following along. We are broadcasting this to YouTube, but no chat over on the YouTube side of things, so... as we always say here on Chart Talk Live, remember to always trade your plans, plan your... Wait, no, I said that backwards. We'd never say that on Chart Talk Live. As we say here on Chart Talk Live, plan your trades and trade your plans. There we go. Go out there and get some green. Remember, we're looking for profits, not perfections. We were trying to find those windows of opportunity where risk reward is in our favor. So keep those wins big, keep those losses small. Spend the rest of your Sunday recharging your batteries, doing your homework, getting ready for the week to come. Remember, it will be a short week with 4th of July on Friday. We only have 4 trading days this week, so keep that in mind. Certainly a good excuse to go ahead and buy the week after next's expiration. I guess it would be July 11th. So with that, I want to thank everybody who took time out of their weekend to join me here this morning. I hope you all found it productive and informative, so much so that you will come back for the next Sunday session. So until then, we do have the pre-market chart talk live sessions every Tuesday and Thursday at 8:30 a.m. Eastern Standard Time. Anybody and everybody can participate in those, including those watching on YouTube. So make sure to make some time for those. They are incredibly important and useful for getting ready to go forth and conquer your trading day. Navy Plum, Trading Dad, all the regulars that come to that will attest that we find great setups and you know exactly what to do, even more so than just following the charts and the bot alerts that I feed into the chats. So with that being said, go enjoy the rest of your Sunday, the rest of your weekend. Thank you all so much for being here with me. Our next session is Tuesday morning at 8:30 a.m. Eastern Standard Time, and our next Sunday session will likely be the last Sunday of July. So until then, take care, have a great day. Look forward to seeing you all in the chats in the meantime. Thanks again.